Hi, welcome back to Conarchy's Money Corner, your YouTube channel teaching you how to handle your money decisions financially and not emotionally. So every day there are mortgage companies and mortgage loan officers all across this country selling you on what the mortgage rate is that day. Some of them even buying huge billboards on the side of highways to sell you this too. The media is also guilty of this. Reporters telling you with certainty, here is the mortgage rate this week. Well, I'm finally here to share with you the truth about mortgage rate quotes. And the most important thing to understand is that every single mortgage rate quote is a custom quote. Just like a fingerprint, right? We all have our own unique fingerprints. Just like that, each person has their own unique mortgage fingerprint. And your mortgage fingerprint determines the exact mortgage rate you will get. And with the major changes that just were instituted by Fannie Mae and Freddie Mac, this mortgage fingerprint becomes even more complex. Now your mortgage fingerprint is going to be made up of a minimum of 67 variables. And until all 67 of those variables are known, you cannot get your mortgage rate quote. And anyone giving you a mortgage rate quote before knowing the answers to all of these 67 variables is like a mechanic or a body shop repairman giving you a quote without ever seeing your car, or a carpenter telling you how much your home remodel estimate will be without ever seeing your home or what you want to do to it. It's like a doctor prescribing you medicine before a diagnosis. It's all malpractice. But unfortunately, there is a lot of malpractice going on in the world of mortgage rate quotes these days. So I took the time and I put together this flow chart to show you all the variables that go into determining a mortgage rate quote for somebody. And as you can see, quoting your mortgage rate is a very complex process. Most people try to simplify this process, but that will always lead to overpromising and underdelivering. A change of just one of these 67 variables will change your mortgage rate quote. So as we go from top to bottom on this chart, every line shows you all the variables for its corresponding pink box. Did you know there are completely different rates for if you purchase a home, or if you refinance a home, or if you do a cash out refinance of your house? Then there are completely different rates depending on what your middle credit score is. Remember, the mortgage industry pulls your credit score from all three major credit reporting agencies: Equifax, Experian, and TransUnion. Each agency gives us a different score for you, and we use the middle score of those three. Now, if you're getting a mortgage with somebody else, we will then get 3 credit scores for them also. Again, using their middle credit score, and then we use the lower of your middle credit score and their middle credit score to determine what box you fall in on this scale, knowing that the rate is completely different for each one of those boxes. Then we need to determine the mortgage amount that you're going to borrow to the value of your home. Again, knowing that the rate will be completely different depending on which one of these 9 boxes you fall in. Then did you know that there are different rates determined by the property type of your home? For an example, a condominium will almost always have a higher interest rate than a single-family detached home. And another big impact on the rate you get is if you're buying this home to live in as your primary home. If not, will it be a second home, or as some people call it, a vacation home? Or maybe you're buying this home as an investment property and renting it out. After changes by Fannie Mae and Freddie Mac made in 2022, second home and investment homes have significantly higher rates than a primary home does. Then here is a new variable that's going into effect with these recent changes by Fannie Mae and Freddie Mac. Debt to income ratio, or DTI as we call it in the mortgage industry, is your total monthly mortgage payment, principal and interest, property taxes, homeowners insurance, plus all your other monthly debt payments, cars and credit cards and student loans, all of that totaled up and then divided by your monthly gross income. Now, if your DTI ratio is greater than 40%, your rate quote will be higher. Then the next two are pretty obvious ones. The mortgage product and the mortgage term you choose will impact your rate. But look at all those different combinations that are there. Each combination having a different rate. The mortgage type is also a variable, and I've listed here the 6 main options of mortgage types. There's more, these are the 6 main. A big thing is the difference between what is a conforming and a non-conforming mortgage. Conforming means that it conforms to the government-sponsored enterprises of Fannie Mae and Freddie Mac. And in most areas of the country, Fannie Mae and Freddie Mac will let you borrow up to a mortgage limit of $726,200 here in the year 2023. If you are looking for a mortgage amount above that limit, then it will no longer conform to Fannie Mae and Freddie Mac. That is when you need a non-conforming mortgage, or the slang that we use in the mortgage industry, a jumbo loan. As you guessed it, each of these 6 main mortgage types has completely different rates. Then what is one of the biggest determiners of the rate that you get, and ironically is the simplest one that I have listed here on this flow chart, is the amount of the mortgage that you will borrow. Did you know that the larger the mortgage amount you borrow, the cheaper the interest rate will be? I find a lot of consumers don't realize this. Yes, think of it like Costco. When you buy a greater size and quantity, the cheaper the cost becomes. Same with mortgages. A higher mortgage amount will have a lower interest rate, and a lower mortgage amount will have a higher interest rate. Now, when you are getting a new mortgage, you have to lock in that mortgage rate. Think of it sort of like when you're buying a stock. But that lock isn't good forever. It has an ending point. The period of time you lock in your rate is also going to determine your interest rate. Having a mortgage company hold your lock in for just 15 days of uncertainty will be cheaper than if you have them hold that rate for 60 days of uncertainty. I've listed the 4 main options here to the left, but no locks can go all the way out to a year in some cases, paying higher costs the longer you go out with all that uncertainty. And finally, and by far the biggest variable, what are you going to be required to pay up front for the rate that you get? The biggest and most hidden variable of this whole mortgage rate process. The mortgage industry and the media tend to flash a low mortgage interest rate, but that assumes you're paying one or a number of these fees that are listed here. I listed here 12 of the most common fees I have seen over the years that consumers have been required to pay to get a lower interest rate. I am typically not a fan of paying upfront fees because historically it's been shown that you typically do not get the upfront fees saved back in full. These fees are simply prepaid upfront interest in return to save monthly interest. But with the math example here, say that you pay upfront $6,000 of upfront prepaid interest to save $100 of monthly interest. Will you then be in this mortgage for more than 60 months to save back that initial $6,000 that you paid up front? Again, history has shown us that rates typically fall and you refinance before that 60-month period arrives. So be aware and on guard of this last variable, as it will be the biggest variable that will determine the mortgage rate you get. So to show everyone that I had the lowest interest rate available out there, I would simply need to just assume and use all the best variables here. A purchase mortgage with a 780 credit score, 30% loan to value, single family and primary home, less than 40% DTI, a 10-year fixed Fannie Mae mortgage, $726,200 mortgage amount on a 15-day lock with $6,000 of upfront fees. But as you can now see, that would be overpromising, not to mention misleading. We all like to get quick answers these days. But now you know answering the question of what is your rate today should not be done quickly. I hope this has helped. This was cool doing this. If you have any questions or comments on this, please leave them in this YouTube video's comment section. And as always, feel free to contact me directly if you have any specific questions regarding all of this and how it affects you obtaining your mortgage and your mortgage interest rate. As you know, I'm always happy to help with this. Please don't forget to subscribe and to like my Conarchy's Money Corner videos. And as always, I look forward to talking to you, explaining these things to you next time on Conarchy's Money Corner. Thanks again, and we'll talk to you soon.